What's up, everybody? We are live. We are on time because we are not Tanner. Let me let me change this because this is the Bootleg Weekly with Tavis and Roy. Your favorite show, our favorite show to do. Roy, how's it going?
Okay.
Yeah, dude. I know zero things about PayPal. Zero. I didn't look at the price action. I didn't look at the nothing. I've been so freaking bogged down with SoFi. So I'm happy to do a little download bilateral.
Well, let's talk PayPal earnings. Let's talk in a few moments about this. Probably not so much the earnings for SoFi, though we can, but the after action, after hour stuff that wiped out all the gains. As always, guys, on Bootleg, there's a couple other topics we may get to, we may not, but we want to have time at the end for you guys' questions. And so feel free to put those in the comments. If they're related to what we're talking right then, we may get to them right then. Otherwise, we'll kind of save them up for the end. Wouldn't mind talking a little bit of HIMS too with you today. And Novo Nordisk. It's a great day to hate on Novo Nordisk. UNH, we can talk about that too. There's a lot of news. So how are you, Tavis?
It is so freaking crazy because there are entire weeks where you're like, do we want to do a show? Like, I don't know how much news there's going to be. And then there's days like today where there's like 4 companies that I want to talk about that all reported, and then they all have their own news, and like it's a whole thing. And yes, at least my covered calls are safe. We'll see. I don't want to talk out of turn, Carl, but I want to either roll those even further or probably just buy them back way cheaper. And then I'm going to post that meme on X. Like, this is the day you almost caught Captain Jack Sparrow. Cause that's kind of how I feel. That like I was getting text messages from friends because they all hold SoFi and they're like, dude, all of my gains are gone. And I was just like, LOL. That sucks.
SoFi loves to dilute, but there's reasons for it. We'll talk about that. PayPal loves to cause pain.
Yes, Painpal.
There's no reason for it, as far as I can tell. That's a frustrating thing. Like, so you want to start on Painpal for a few minutes as people get here? SoFi.
Well, you can start wherever you want, man. Nothing can bring me down today.
I typed in Painpal.
Yeah.
All right.
Bigger symbol, pain, PAIN.
So this is, I don't know, man.
So we will talk about this capital raise. I assure you we will. We have to eat our veggies before the dessert. Roy, continue.
So PayPal actually posted better than expected earnings. It did. Triple beat on guidance, beat on revenue, beat on EPS. Actually, pretty much smashed on EPS. That was the only concern that I have. Going into this quarter, and you can see like it sold off, negative 8.66%. Going into this quarter, I won't even pull up the slide deck. It doesn't really matter because you look through there, it's good. I've heard some people say, okay, well, the reason why PayPal sold off is X, Y, and Z. So they're like, well, there's no innovation. Well, clearly that's not the case with what they've been doing as far as this massive media press release talking about PayPal World, which is not a small, like global interconnected wallets. It's not a small thing. Pay by crypto, others are doing it, but to this extent with this integration with merchants, that's not happening. Wix saying is maybe not innovative, but it is accretive to the bottom line. The Big 12, Big 10 partnerships, I mean, like it just, so that's not it. So some people have said, well, that's clearly because of the revenue. Well, revenue, it's all about expectations, or at least it should be.
Yeah.
Last quarter, they posted 1% top line growth, which is terrible. Like that's just terrible.
Yeah.
Would have been 2%, would have been 3% maybe, just because of some lapping things. But bottom line is there's been a 5% drag on the stock from PayPal simply because of the Braintree margin shift. That they shifted from growing massively in the top line and not caring about the bottom line to saying, okay, actually this strategy is ridiculous, it's stupid, and it's the reason why the entire C-suite got fired, why they're all different. Because you cannot just give away your product and hope that it works out. It's like, that's dumb. So instead, they shifted and they said, we're having conversations with merchants that we're now getting lower volume, but in exchange, we have higher margin rates. So you've seen their margin continue to improve quarter after quarter. Now, the gross margin is going to be lumpy, but you can see the take rate. You can see a lot, basically inflection there. So if you look at revenue, people were expecting 2, maybe 3% revenue growth. It was 5%. So it was a beat. It's actually a beat by $200 million, which is not small even for someone like PayPal.
Well, 5%, la-di-da.
And that's 5% with the 5% headwind from Braintree, which is going away fully in 2 quarters. So
almost double digits.
They will be back to double digits next year. So advertising will help. There's a lot of other things that'll help with it too. So like, if that's the reason, then it's a stupid reason, because people, markets, myself, analysts also were expecting a much lower number. So then free cash flow. Now, free cash flow was very light. It was, I think, $680 something million. They guided for $6 to $7 billion over the course of the year. It was a little bit lighter in quarter one. It's always heavier in quarter four, or usually anyway, just because seasonality, e-commerce and all that stuff. So what's going on here? Well, they didn't do a very good job about talking about it. They did say it's because of working capital and just the timing on these things. But I had a friend look at the Bloomberg terminal because the 10Q isn't out. And in essence, basically, they lent out $2.1 billion more than was expected to merchants for working capital. And temporarily, that counts against the free cash flow. So in essence, I mean, honestly, that wouldn't change anything. PayPal could cure cancer. PayPal could have run the entire U.S. economy, and the market would just sell it off. That's where we're at with the stock. So everything except for 2 little things in the free cash flow is explainable. By the way, free cash flow, I'm not concerned, simply because they reiterated 3 times, not just once, but 3 times, so it wasn't going to be missed. We're still going to hit $6 to $7 billion in free cash flow. What you're seeing right here is just a timing thing. You're going to see that in spades in quarter 3 and quarter 4. Now, if this was a company that guided very aggressively and missed from time to time, I'd be like, oh, okay, well, yeah, maybe I don't believe them. So that's not it. So I have no idea why PayPal sold off on a triple beat. Like, what would have happened if they missed one of those numbers, Devis? Like, down to $50? I think that this might be the first company ever that posts $7 billion in free cash flow and goes to 0. So, yeah. Yeah, no one cares about PayPal. It's a stupid, stupid stock. Let's move on.
That sounds like a depressing morning, bro. You shouldn't have left us. That's all I have to say.
Yeah, it sucks. No, like, so the frustrating thing is, if it was like, if I looked at PayPal, I'm like, oh yeah, they really screwed up here, or they really need to improve here. That would make sense. It's like, oh yeah, I mean, like, maybe it shouldn't have sold off this much, but when you look at it and it's a triple beat, and everything that 2 years ago was a problem is improved dramatically, and it sells it off anyway. It's like, dude, that is freaking ridiculous, silly, frustrating. And the worst part of it is, I have too much PayPal in my stock portfolio, so I can't buy anything. I'm not allowing I did buy a little tiny bit, but it's like it's a very small amount. It's less than 0.5%, so it's not meaningful. It's just out of frustration. I actually timed the bottom, but although it's probably not the bottom, knowing PayPal, we'll probably go into like $30 a share. Have the highest or the best PE out there. They'll be buying back 30% of the company each year, growing massively, and like nobody cares. Yeah, I don't get it. I don't get it. So yeah.
That I agree with that one comment. I think PayPal will have its day. I don't know if it's today, tomorrow, or next year, or next 10 years, but its day will come at some point, I think.
So the last piece on PayPal is, like, I've seen this as the last challenging quarter. It's just because of those Braintree headwinds. Again, well covered, well discussed. I talked about it there. That's dissipating immensely quarter 3. It's gone in quarter 4. So from my perspective, with everything that they're rolling out, which is massively ramping revenue, also the bottom line numbers, like free cash flow, is going to look ridiculous. Although with free cash flow, always be careful, guys, to not read too much or too little into it. Over the year, you can get a very good read on it. Over each individual quarter, the next 2 quarters, free cash flow for PayPal will look like it's the most ridiculous profitable company out there. And it's like, it's not as bad as it looks this quarter. It's not as good as it'll look next quarter. It's still good, but it's somewhere in between. So anyway, like, this is the last challenging quarter, I think. That doesn't mean that the stock price will follow. It just doesn't. It's PayPal. It's a terrible stock. It's a great company. Usually one of those follows the other. We'll see. Maybe this will be the first time it goes to zero, despite putting up $7 billion in free cash flow.
People just getting progressively angrier and angrier the longer we talk about PayPal.
Yeah. Okay. Let's move on. It's a stupid stock. Let's move on. No one should buy it.
Yeah,
no one should.
That's and look, guys, like that is from Alex Chris's own brother. All right, they are our family, and Roy is saying that it's like the stock. Yeah, the stock is just it is frustrating. Now let's talk about something else that's frustrating, Roy. Our beloved SoFi pulling a Weeble with an after hours raise. Did you see this?
Yeah.
All right. So
they
waited until after the bell, and they announced an underwriting a public offering of $1.5 billion worth of shares of its common stock. And they're also expecting to grant the underwriter a 30-day option to purchase an additional 15% of shares of common stock. The underwriter in this case is Goldman Sachs. And so that's like about $1.725 billion worth of total shares, assuming Goldman were to exercise that full 15% in addition to that 1.5.
And they will. Like that always happens.
Obviously. Yeah, obviously they will. Where's that segment that says how they're going to use this money?
So that's in the SEC filings themselves.
No, they mention it here. SoFi intends to use the net proceeds from the offering for general corporate purposes, including working capital and other business opportunities. And you have this up, Roy?
Yeah, this is the actual SEC filing. There's actually two. One of them is, by the way, a very blank prospectus. You can just, they'll fill it in as they get there. That's actually common. Nothing is alarming here. This is the actual filing for the shelf offering. The use of proceeds, unless otherwise indicated in the prospectus statement. Nope. Very standard boilerplate here. Here's the things it can be used for. General corporate purposes. That can mean, by the way, I have a separate video coming out in like 3 minutes that'll post this. I don't know. I don't think that this is bad for SoFi. It's just frustrating. It really is. General corporate purposes can be something like, okay, there's a massive opportunity for lending. We're a bank. We can basically take on margin, which is effectively what this is, lend out heavily against that and make a boatload of money. I don't think they're doing that because that would be weird. That would be uncharacteristic for Anthony Noto. And also, like, they didn't allude to any of this in the earnings call. So that's probably not it, including working capital, which is general corporate purposes, acquisitions. This is probably what this is. So going back to quarter one, they specifically mentioned this right here, which I think is interesting. They said, in addition to enabling members to invest in crypto coins, we will enter other areas over the next 6 to 24 months. This is, again, 3 months ago, but potentially much sooner by acquisition or if the changing regulatory landscape allows. So in essence, 3 of these months have already gone. This is very likely a crypto-related acquisition that they're doing this for. We don't know that for sure. The market hates uncertainty, so it is selling off. Plus, I mean, I might be very excited depending on what they're buying, how they're buying it, how they're integrating it, but we don't know. And there's a lot of unknowns. And so it's frustrating right now. I'm not a huge fan of dilution. And the other thing is, like, this absolutely kills the momentum of the stock. It does every single freaking time. Yeah, SoFi will acquire PayPal for $1.5 billion. I mean, that would be a steal, although it's going to bring SoFi to zero. So sorry, guys.
I 1,000. You cannot convince me otherwise that this is not a crypto-related acquisition. I mean, it could be something else, but I just they've mentioned that they want to go deeper into crypto. They've mentioned that they possibly want to do it through an acquisition, and now all of a sudden they're raising money, even though they're already well capitalized. Like, guys, this is a company that has a history of buying other companies, pretty much like a company every year for the last couple of years. I think minus 2023 or something, or 2022. Like they bought Galileo, Technisys, Golden Pacific, Wyndham. Like I think they're going to buy a crypto company. Noto today, earlier in the morning, he mentioned they want to be a leader in the crypto space. So, you know, I think something's going to come. And like here's the thing you have to keep in mind, guys. The thing you have to keep in mind is that if you are in fact long-term focused, this is good because they're going to use this money to accelerate their growth. The growth is going to come back in the form of, you know, multiple expansion and stock go up. If you're short-term focused, this is bad because dilution and stock's going to pull back.
Yeah. Yeah. And it sucks for those that are short-term because like it's probably going to take off further. Like I wouldn't be surprised. Like it's not going to 28. It's not. Macro is also softening, at least today. We'll have to see how that goes, despite the EU tariff stuff that I'm sure we'll talk about. But yeah, it's a real momentum killer. Like we could see SoFi at 15. The funny thing is, a ton of people after that earnings were like, "Oh man, I hope it dips so I can buy more." Here's your dip. Where are the buyers? They're not there. I mean, I'm sure there's a few of us. And honestly, if we get to a certain point, I'll probably buy. But I'm going to wait until I see what this is for. It could be for something stupid. It's probably not. But if you know they way overpaid. Actually, let me back up. The one thing that bugs me about this is the size of that offering. $1.5 billion plus another 15% on top of that. So we're looking at, you know, almost $1.75 billion. Now, in the scope of things, that's not a massive acquisition, but it's not small either. WonderFi, for instance, is a crypto-related company that's up in Canada. Robinhood paid, well, we don't know what they paid, but it was a very small acquisition. Bitstamp was one that they did, again, crypto-related. It was significantly smaller than this price tag. So either A, this is a couple of acquisitions paired together. B, they're overpaying for something. C, it's a, well, acquisition plus we're going to loan against it. We'll settle some debt, do a different few things here and there. But what really frustrates me is probably we're going to get no communication on this anytime soon. I mean, we will in a few days, I'm sure. This offering will fill. It'll be oversubscribed. They'll talk more about it at some point. But Noto went on Bloomberg, I believe, interviewed and said, "Oh, we don't need to raise any capital." And then boom, it's like, well, what is this? Well, at least they could have alluded to it in their earnings calls, like we're considering acquisitions, or we're definitely in the market for like none of that. That was last quarter one. So their communication stinks, honestly, for us shareholders. It's not right. It's not fair. It's not done appropriately. And the worst thing, last thing, Tevis, and I'll throw it back to you. This was an amazing earnings, an amazing, like ridiculous beat. Now, was it quite as good as I expected? No, not quite, but almost. Like it just blow out the water, you know, 44, almost 45% year-over-year revenue growth. Who cares about the weak year-over-year comp? Nobody cares. They're just doing amazing things. You look at what they said as far as a loan platform business, how fast that's accelerating. Even the tech platform did well, like kind of relative. So it's like
15%.
It's so hard to find any negatives. And then they're like, okay, guys, guess what? We really need to stop the momentum. We need to take the eyes as soon as we can off of this amazing quarter and not let this stand for ourselves. Let's get out there and dilute without communication. Why?
So, yeah.
Seriously. Plus,
no, go ahead. Finish your thought.
Well, I was going to say, plus, you never know what's going to happen with the stock price. But usually, when you see reports like this, you get some that day, but all through the week sprinkled through. I haven't read Devin Ryan's report, by the way. He just came out with it. Upgrade after upgrade, raising of price targets, which does what for the price action? It goes up. It should have been up by more than this percent. So if they, for whatever reason, need this capital and it makes sense to do this acquisition or whatever, I am upset. Like it's stupid. Like strategically, it's stupid. They could at least, they knew what they were going to report for earnings. They knew it. It wasn't like, well, we don't know what we're going to report. They know. And when you report like a 40% year-over-year growth and you blow people out of the water as far as expectations, your stock is going up. So you know what's the best thing to do? If you're going to do a shelf offering, wait until you have time for the analysts to come out, raise their price targets, the market to get excited, new buyers to come in. Some people take profits. That's fine, whatever. You might be looking at SoFi at $25, $26, $27. in which case there's less dilution for shareholders for the same amount of capital raised. It is piss poor strategy. This is as close as I get for cussing by SoFi and their management, and it stains what otherwise would be an amazing day for shareholders. And I hate that. It frustrates me. It's poor timing. I don't know what they're thinking. Now, long term, I agree with you, Tevis. This is probably something that's very good, but the way it's done, I don't like it. I don't.
I love Mad Roy. Can we get Mad Roy more often? I was gonna make a
This makes me more mad than the PayPal stuff. I wasn't mad at, I'm confused with the PayPal stuff. This is what I'm angry about.
Mm-hmm.
And when I was recording the video, by the way, the little SoFi video, don't switch away. You can watch it afterwards. I was calm. I was measured. And then when you start reading, I'm like, dude, this is just stupid. Why are they doing it this way?
Mm-hmm. Yeah, man. I was gonna crack a joke, being like, "Hey, I called Anthony Noto and I said, look, dude, I need a favor if my covered calls are underwater." But I don't know why they would announce it, like, because he was flat out asked, and you could just say, like,
yes, you could just say no comment. Fine, no comment.
Just say wait for a couple hours. Stay tuned. Like, your stock already pulled back from being plus 17%.
Or nothing's off the table. We're considering all options. Fine. That's fine. Don't say, oh, no, we don't need to do that. It's like, it wasn't a lie, but come on.
So I think you were on an interesting thread earlier. Because it seems to me that every individual retail content creator on the SoFi community simultaneously reached the same conclusion independently, which was crypto acquisition. Like, there's nothing that makes more sense than a crypto acquisition.
Yep.
And quite frankly, I'll go so far as to say at this point, I would be disappointed if it was anything but a crypto acquisition, because they've been talking about this damn crypto segment for so long. And I think that, Roy, they might be launching the international, payments, international remittance, and the crypto like wait list, reintroducing the product with the acquisition at the same time. Like, they might be launching it all as a lump sum thing, or at least a press release. They are bad at communication. I made this comment in the morning saying, like, guys, like, if you want some real questions in the Q&A, like, have some retail questions, because fucking Reggie Smith is out there being like, what are your KPIs that you guys are tracking? And it's like,
just ask win dividend, like, at that point.
Just like,
waste of a question.
I know you guys provided guidance 3 times, and in the opening remarks, and also in my other analyst questions, but, like, can you provide it again? Okay. Anyways.
Honestly, if it's like a pay by crypto type of thing, I'll have to see what it is. That doesn't excite me at all, Tevis. Like, PayPal just launched something like that. They're better positioned, but it's a lower margin product. It's not, it'll add to the TAM, but it's not a, like, wow, this changes the thesis. And if they paid $1.5 billion or more for that, like, I don't think, they're not positioned internationally anyway, which is where it makes the most sense.
No, I think the international remittance and those, like, through blockchain, that's something that they can do on their own. The acquisition, I think, is going to be necessary to move outside of that brokerage side of things, to do crypto-backed lending, to do stablecoins, to do staking, and to do digital native or digital asset infrastructure through Galileo. Like, I think all of those things are things that they would need some type of other institutional knowledge from the crypto perspective to do. And I think that's ultimately, number one, where the big money is going to be made in the crypto space. And number two, if they want to be a leader in that crypto space, which is what Anthony Noto said earlier today, like, that's what they have to, like, they're trying to pick off all the easy, low-hanging fruit on their own, sign up for the wait list, international remittance, whatever. And then all the big heavy hitter stuff, paired with the fact that they are a chartered bank, I think they need an institution to be able to do.
Yeah, and there were some interesting comments. I can't say that they said nothing about crypto in their talks. They did. One of those that kind of went under the radar was the mention of tokenizing the loans.
Yes.
Did you see that? What do you think of that?
I think this whole concept of tokenization is really interesting, right? Like I think Robinhood is largely leading the charge on that. And I could totally see it evolving into this world where everything is tokenized, right? Like you almost go into this NFT type of NFT 2.0 where it's has another layer of legitimacy because what you're tokenizing actually makes more sense than artwork. Um, but I think it's going to provide a lot more liquidity into the markets. And again, if it's a space that everybody is looking, like if this is where the wave is headed, then they have to sort of swim with it at this point.
Yeah, they were even asked in the Q&A about that, and they didn't really comment too much. But Noto's initial quote on tokenization, in case anybody missed it, I pulled it up in Quarter and I lost it. 1 second. It really it's interesting. So this may be like a crypto lending thing. It may be loan tokenization. If it's something core to what SoFi actually does, like that could be really really good. Yeah, I mean like. Now we all share pain. Yay! As we look further down the road, we see potential to tokenize SoFi loans to make them more widely available in liquid markets in increments of dollars rather than tens of thousands of dollars, such that anyone can invest in loans just like they do equities. So yeah, we'll have to see. But and they mentioned crypto a couple of times too. So it's crypto related, tokenization related. We'll see what it is. Pay by crypto, for me, probably not exciting. We'll have to see what that actually looks like. But yeah, this is a lot of money to raise for what I thought would be the size of the acquisition that they'd go after. So Tevis just died.
Sorry.
Fresh horses we ride, right?
This comment killed me. Oh man. God. Okay, so let me say that I love each and every single one of you, but you guys are all degens, man. Like this comment, I think nailed it, and it was really funny to me. Like I have covered calls, and I was like, you know what? Trust the process. If they get absolutely blown out of the water, then they do. But trust the process because for the last 7 quarters in a row, this thing has sold off, and it's tradition at this point that this thing sells off. And I made a post, and I said, look. This really separates the new SoFi investors from the ones who've been here at single digits because they know what the SoFi bag holders club is all about. And I'm just glad that you guys didn't have to wait a couple of years to experience that for yourself, that within the first 24 hours or within the first 7 days of you holding the stock, you can finally experience what it feels to have a rug pulled.
Yeah. I do see a comment from Imperator and Maximiliano. Some others speculated on this too. Tell me why SoFi is acting like a Bitcoin treasury with the offering. Honestly, if they went after that, I mean, it may work out, but I would not be happy. This is not the right business for that. Any more than like if PayPal did the same thing, which they could do that without diluting. No, I mean, there's some companies where it makes sense. Block is one of those. Jack Dorsey is all about the Bitcoin. That's fine. Having some of the balance sheet, like for Tesla, whatever, they've got a lot of cash. Don't go into debt for that.
Yeah, I think Neil nailed it here.
Yeah. Well, and they actually, I mean, they alluded to that, like underinvesting in their business. Now, part of that is because they guide way too conservatively, and they believe their own guidance, which is really weird. And so they spend according to that guidance, and so they ended up not spending or not investing enough going forward to have the gains that they would like to have or that they're capable of having. So yeah, this is something long term, and it should be, it probably is. Like these are not idiots there, and they understand crypto well. That's all. And this could be really good. It just I still think it's A, frustrating, obviously. B, it's the wrong time. It is. Now maybe we'll find out that there's a reason for it, but
here was a quote from earlier today on their crypto side. I had a transcriber going during the call, so I can get the full quote. This is Anthony Noto, quote, both self-serve international money transfers and cryptos are expected to launch later this year. More innovations to come. Crypto is a key area of focus for our management team. And when we have brought on board significant expertise, including substantial engineering talent to advance these new initiatives, the cost, speed, and security of paying, buying, and spending are worse today than there will ever be in the future. Faster, safer, and cheaper options will only get better and better every year. Over time, we see opportunities across our entire platform, including offering stablecoins, providing members the ability to borrow against their crypto assets, expanding payment options, and introducing new staking features, as well as blockchain and digital asset infrastructure capabilities for other companies offered by our tech platform. And there was one other quote to Neil's comment, basically saying, let me see if I can find it here. Yeah, here we go. Anthony Noto again. I think our biggest challenge beyond 2025, quite frankly, is deciding what not to do. There are more opportunities on the table for us than ever before. It feels like we're just getting started. Our goal and prioritization will be to allocate resources to those segments and businesses that can drive the best compounded growth over decades, as opposed to just a couple of years, with the overall goal of an ROE that's 20 to 30%. So what do I want to say by that? Basically, on the earnings call, they gave us a playbook of their mentality, of their framework at which they're approaching these new acquisitions and their growth drivers. They know. So they basically said, we are always going to chase whatever is the highest return on investment opportunity line for us. Number one. Number two, we're thinking in decades, not thinking in years. And number three, that AI and crypto are the two technological advancements that on the macro level are going to make the biggest impact, and we want to be at the forefront of them. So I think those three things should speak to the mentality that management has, that should serve as an underpinning for this capital raise and where they could potentially allocate this money. So if you're like, oh my gosh, I just bought SoFi last week and it's down 6% and it should have been up, blah, 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 I should sell. Well, the reason why you can get earnings results that are as good as the ones we got is because management has foresight in planning ahead and how they're going to continue that growth rate for years into the future. And this is just one of those things.
Yeah. Yeah. I'll be very, like, most of that sounds really good. I don't quite know what they mean as far as like exciting staking, or if they're just like, hey, we're a bank and we allow staking, which previously would have been unheard of. And actually they probably have to wait a little bit on it anyway. But if it is pay by crypto, like I'm not going to, well, we'll have to see. But I'm probably not going to be really happy with that. I won't be excited. Again, PayPal literally just launched pay by crypto, which is 100 different cryptocurrencies, wallets worldwide, globally. They announced PayPal World, which is the global wallet that's back-ended, by the way, by their own cryptocurrency. They're immensely better positioned. And I looked at that and said, PayPal World is actually pretty cool. Pay by crypto, I'm like, it's okay. Like, it's not amazing. It's not even great. It's just, all right, guys, I guess. So if SoFi spends $1.75 billion to enable something that for PayPal, which is way better positioned for that I was like, it's all right. I'm going to be probably reducing my position by a good bit, but it's probably not that. Like, I know they've talked about that. They should be able to build that out themselves. And if they do, or, it's a very small acquisition and a series of acquisitions, that's fine. We'll have to see. So that's the reason why the market is doing this, I think, is, SoFi has gone up immensely as a stock. It's appropriate and right to take gains, or if you're Tevis, sell aggressive covered calls and pray. But for the rest of us, I didn't take gains. I didn't want to here. Long term, I'm in this. It will be higher eventually, but maybe not for a while. But markets don't like uncertainty. They tend to react to things like this. So if it's great news at a great price, great. We might resume that. But yeah, bad timing, bad communication. We'll see.
Don't forget, Tevis also has leaps. And I took a look at my $10 calls and they look really, really nice. And I was like, should I cut these today? And then I didn't. And I probably should have in the morning, quite honestly, when I was looking at them, because they're for January 2026. But I still hold to the idea that SoFi is going to be higher than $25. I mean, that's why I gambled with Mr. Matthew Farley. So we'll see what happens. I mean, like, this is not the first blip. It's not going to be the last blip. Mr. Josh made a whole bunch of money trading earnings because he sold in the morning like an actual astute, educated investor, not like us degens just holding the stock.
Good job. Yeah, it's always like if you need money over the short term, like you're like, hey, I need this money in the next year. Lock in those profits, guys. There's nothing wrong with it. Doesn't mean you're paper hands or whatever that was back in the prior bull run. So, because things like this can happen, macro can sour in a hurry. It can also go up, but like when you've actually gains are not yours until you've realized them. So, and if you have a long-term mindset, like this is just a bump along the road, very good management. They're not perfect. They do make mistakes, and frankly, I think that long term, this is probably not a mistake, but the timing, it could have been better. Communication could have been better. Yeah.
Welcome, Lenny. Long-term Lenny. Name checks out.
Yeah, there was a comment.
This one?
Forex matters. This is 7:04 p.m.
Oh.
NOVO was very disingenuous today regarding raising capital. That said, if he levers this capital, true to his history, I'm holding, so believe we can see 100 share price in 3 years. 100 is probably really aggressive, honestly, but yeah, I don't think he was disingenuous. He was asked a direct question. I believe the question was, do you need to raise more capital? And he said, no, we don't. Now, it's true. There's nothing technically a lie about that, but it would have been a lot better of like, we don't need to raise capital. We can or reserve that right if we see an opportunity, something like that. Great.
Dude, come on. That's like your wife asking like, where did you go last night? You were like, oh, I had drinks with a friend. And it's like a hot female coworker, just you and them. Technically not a lie, but still she would get mad about it.
Yeah. I mean, like, yeah, I still don't like it. I'm just saying I wouldn't use the word disingenuous here. Like he's not lying, but that could have been worded so much better.
Yeah. Well, it kind of begs the question, like, do you think he was caught blindsided a little bit by that because like it didn't seem like he was very well prepared for it.
Yeah, it did take him off guard. Someone else, by the way, mentioned backed BKKT diluting today. I didn't realize that. They've been one of those that's been on my mind that of a possible acquisition target. I don't know that SoFi would be the best fit for it or not, but there's a lot of other smaller crypto companies out there too that will be interesting. I mean, like it doesn't make you feel good as an investor. Like that's the other thing. And
yeah, good reference. Does it happen to a friend in the CEO? Did they go to the concert, Igor? Yeah, it's going to be interesting, man, because the sheer size, in addition to the cash, like the liquidity that they already have, like it just points to it being a big acquisition. And then I think like that's the thing that makes me excited is what Galileo was their biggest acquisition, and that was $1 billion, something like that. And so them going bigger is kind of interesting.
Yeah, it's weird. Like that's the weirdest thing. In a lot of these, depending on what they're acquiring and who they're acquiring, there's a lot of very tiny crypto companies that don't have nearly that price tag. So it could be a couple of them. It could be, if it's something like Back, that's actually more. Obviously, it's not Coinbase, probably PayPal.
Yeah. and for people who are just new in the stock market, it can't be PayPal. PayPal is a bigger company than SoFi. Just look at the stock prices.
Also, it's not Robinhood, guys. So sorry.
Noto said, and I quote, "We could be opportunistic from time to time if it can lower our cost of funding and help give us continued growth capital." I mean, yes, but also, who would have thought that from time to time literally meant 3 hours from now? Like somebody needs to write that press release. They need to, do all the paperwork. The bankers need to get involved. Like he knew when he was asked that this was going to drop later. So I think that's where the phrasing part comes in.
Yeah. Somebody mentioned that they're buying Webull, but yeah, the market cap is too much there too. So by a lot. It's 6.64 billion today. And usually it'd probably be like 10, 12, 15 billion to acquire it. So no.
Here's how I would phrase it. Okay. If you're really concerned about the dilution, because I'm seeing a lot of comments here concerned about the dilution, keep in mind that management has these performance stock units that unlock at certain tranches in June of 2026. So the first tranche is $25, $35, and $45, whereby if they hit the latest tranche, Noto himself is going to get like $400 million. Lapointe is going to get paid. Derek White is going to get paid. All the executives are going to get paid. And that's going to lead to a lot of dilution. But one of the things that we consistently reiterated when the stock was in the single digits was, well, we don't care if it's dilution because that'll mean that our stock is at $45 and our bags are pumped as well. This is the exact same situation, guys. Like, just because the stock hit $25 today, just pretend they hit the first tranche of those PSUs. Like, you're going to have dilution that you signed up for. I mean, we, Roy and I, and others in the SoFi community that were buying in the single digits, we signed up for that. If you told me last year when I was buying SoFi at $7 that they're going to dilute the stock a little bit, but it's going to be at $25, I'd be like, dilute it more. Like, it doesn't matter. Dilute it more. And just because the stock is here, we have recency bias and we're like, oh my gosh, this is horrible news. But in fact, they're going to use this money for growth and there's going to be more dilution because if they hit those targets themselves are going to have more dilution. So it's a way of framing it, I think. And yeah, I agree with this comment by Josh. Noto is on the offensive and he's leaning into growth. This is one thing that was very evident in the closing remarks of that earnings call.
Yeah. By the way, backed, I'm actually wrong on the size of that. It is a $1.41 million market cap. Of course, it went down 41% today, which is part of the reason. So, but I don't know. It could be that, but like they don't need $1.5 billion for that. So,
yeah.
But yeah, we're all thinking acquisition, crypto. Could be other things, but yeah, it's almost certainly that. So that'll be also actually pretty interesting just to see what initially they're able to launch, what they can do. They've been acquiring a fair bit of talent. I actually think they've already acquired their new CTO, and it's not Jeremy Rochelle. He's hopefully on his way out. But
what's his name?
Oh, let me look it up.
They acquired her through an acquisition, right?
Yeah.
Yeah, and like I think this is the next question that I'll ask you, Roy, is like, when do we feasibly think the announcement is going to drop for this? Like, obviously, we're going to get a press release in a couple of days saying that they're oversubscribed or whatever. But when do we think an actual acquisition announcement, if we do think there is going to be one, when do we think, like, how soon do we think that's going to happen?
Probably a couple of weeks. Usually, so this isn't, by the way, the only way to go about an acquisition. More commonly, maybe they just wanted to lock in the gains or the stock price where it's at. But more commonly, if you're doing an acquisition with shares, oftentimes you announce it at the time of the acquisition. So that could mean like this is a combination of several things where they're like looking to acquire 3 or 4 different companies, in which case they might announce those all at once. Or it could be like a combination of factors as well. Yeah. Like I have no doubt that this is meant for accelerating their growth. It's not them diluting just because they like to or they like to cause shareholders pain. I still think it's stupid on the timing and the communication, but yeah, we'll have to see what this is to know how excited we should be. But yeah, my initial reaction was like, this could be really good. And I also don't like it at the same time.
Yeah, I think this is what most people are also pissed about, is just the timing was not great. And I think that like if he wasn't asked just a couple hours prior, then the timing still wouldn't have been great, but it wouldn't have felt as yucky because like it would have been opportunistic. The stock pumped. They want to get a good value, value from it. The issuing of new shares. So it kind of makes sense that you want to issue when stock is high. But I think that the interview part was the thing that left a sour taste in people's mouths.
And it's Flory Gilroy from BlockFi.
Yes.
That's who they brought on very specifically to head or be the senior vice president of the crypto unit for SoFi. If Rochelle is out, I mean, it could be Derek White, it could be Miguel Santos, it could be her that takes over for that role. But this shows that SoFi is serious about hiring and about doing something meaningful with crypto more so than what they had before. You can also see that in the hirings that they filed and whatever this is too. So, yeah,
what's BlockFi's valuation?
I don't think that they exist anymore. It's gone. It was a crypto lending firm, so that lines up very well with what SoFi is as far as their wheelhouse. So, if they end up leveraging crypto for tokenization and also for lending against crypto, and they had a differentiated offering, like that sits naturally in SoFi's wheelhouse, where like pay by crypto. I mean, if they just do that because they're like, well, we're already here, let's just go ahead and do this, and they're not paying a whole bunch of time, attention, and focus on that, that's fine.
Yeah.
But yeah, the lending aspect and the tokenization of loans, that could be really, really fascinating. So,
yeah, exciting stuff. We will see what happens. We will see what happens when or if an announcement comes out in the next couple of weeks. We will obviously be reporting on that. But yeah, I mean, I want to see how the stock opens tomorrow. If we do have a red day, honestly, though, I think like Amazon's just going to drag the market up when they report. But we'll see. I mean, I tend to be wrong from time to time. Yeah, and I mean, he didn't say no to a $53 million bonus. Like they would have had to maintain the $25 range for 3 months, like on a weighted average basis. So it's not like the moment they touch $25, Noto gets paid. Similarly, I need to close out at $25 to get paid by Matt. So it's kind of like the same thing. It's a good sign, but he didn't really say no to anything. But yeah, he is reinvesting in the growth. But 6% is a temporary blip, man. Like I think you can make back 6% on like within a week or less, given on the back of that earnings, right?
It could change momentum though, and so I think that there's probably further downside. We'll have to see, especially as the macro and markets soften a little bit and pull back a little bit. It's frankly, whenever they do things like this, shorts oftentimes see an opportunity on SoFi. I don't know why. It's silly, but one thing I wanted to note and call out. So Devin Ryan, who's that actually amazing analyst. A lot of analysts are just not worth their salt. He is one that is. Specializes in fintech. Tanner, of course, interviewed him. I've met him before too. Really good guy. New to SoFi, but he released updated note, and he's doing this as earnings come out. And he specifically mentioned, probably this was written before the announcement after hours. He said, furthermore, we believe optionality could exist with complementary mergers and acquisitions. So even on his mind, from Noto's comments and from what he's seeing in the stock, he's like, there's further upside on mergers and acquisitions. And it's a very short note, by the way. So it's kind of interesting that he would include that.
Yeah. I mean,
but by the way, he also, because I know people were mad at him when he didn't raise his SoFi price target previously. They're waiting for the SEC filing and then they'll raise accordingly. So,
yeah, I mean, look, honestly, Ian, like I agree with that comment. That is terrible timing for those who bought on earnings euphoria. But those are the same people, like, that's a lesson that the market teaches you. This is the same thing. Like Figma is going to IPO. People are going to buy it all the way up. It's going to pump. It's going to dump. And like, that's just the nature of buying on high excitement. Right. So yeah, exactly. It's a lesson not to chase.
Yeah. Don't get FOMO.
Yeah.
When you're feeling FOMO, if you have a big position, think about selling.
Okay. Yeah. If you liked it at 25, you should love it at 20 and under. That's fair. This is fair. Well, average down.
I'm going to push back against that, though, because, again, this is unknown. We don't know for sure what this is for. Now, we're reading a lot into this, and I think that we're right that this is an acquisition relating to crypto, but it might not be. So it's okay to wait and see what's going to happen. So it's fair to say, oh, man, I loved it at 25 with that amazing earnings report because you see further upside, and be a little cautious here and say, you know what, I'm going to wait for more information.
Yeah, so people are asking us to address David's comment. And David says, why are you calling this dilution? Because this right here. all of the shares of common stock in the offering will be sold by SoFi. SoFi intends to use the proceeds for blah, blah, blah.
Yeah.
So SoFi is selling more shares to raise more money, basically. Am I reading that wrong?
No, you're reading it correctly. So if you look at the SEC filing, like, well, we can even pull it up here because I have it right here. At the very top, can't remember if this is in the prospectus or not. Cautionary risk. No one cares about that. The company. Yeah. We already know that. Use of proceeds. Okay. Yeah, here it is. So, this is after use of proceeds, and this says proceeds. This is not SoFi Invest selling people stock and raising a bunch of money, which would be illegal. But what this is them selling some stock. So the total amount of authorized capital stock of SoFi Technologies consists of 3 billion shares. Now, their float size is not that big. They actually say right here, as of June, we have this many shares of SoFi Technology common stock. They also have some of non-voting common stock as well. But this is the max size that they can dilute to. So in essence, what this is them saying, okay, we are going to, as our right, issue some of these shares out, which are part of this 3 billion, and it will add to this total. And they're going to raise 1.5 billion worth, actually probably 15% more the way that these offerings are usually done. So how many shares it actually dilutes? Well, that's where we go over here. And it's blank. Why is it blank? Because it just depends on what the price is when they actually sell it. Usually this is done pretty rapidly. Closing price was 21.02. It could be a lot lower than that, it could be higher than that, or anything in between as well. So they are diluting. They're using their shares to raise capital. That doesn't mean this is bad again. I hate the timing of it. I hate the communication of it, but I may love what it's for. And I'm guessing I probably will, unless it's paid by crypto, in which case I'll be needing to read more into that, but probably be sad. So yeah, it's dilution. By the way, all dilution is not bad. There is really, really bad dilution. This is just annoying dilution.
Right. Okay. Shall we move on?
Yeah. We're near the end. Are you needing to wrap up by?
No, I will do the Hymns Weekly show at 8:30, so I have an extra hour. Kind of suspected this was going to be a long one.
Yeah.
So I'm free, dude.
Okay, so we don't care about UNH, right?
Do we care about UNH? I mean, I sold some puts on UNH today.
Are they going to fill?
Yes. Yeah, I sold them at 280 and 275.
Yeah, it was mixed. It was a mixed bag. A lot of people were expecting a greater beat. Revenue looks good. There's still some headwinds there. It's not a stock that I'm in. It's not a stock that I know well. And it's also a space that I don't want to be in. Plus, I think that these guys are dirtbags, and I don't like to invest in dirtbag companies. You do you. I'm not saying you're wrong to do this, Tevis, or anybody else. It's just myself. I sleep better when it's companies that I actually like. So even if they are Painpal. But this one I think is going to be taking a lot longer to be a turnaround than a lot of people expect. And usually turnaround plays do, especially when it relates to leadership, management, structure. There's a lot of Affordable Care Act stuff that's noise. They're probably healthier than what the market is currently priced in. They're down almost 48% year to date. You look at their dividend yield, it's 3.39%. It's not crazy. PE is like 11, which is, I mean, if this business is not dying, going away, being sued massively into oblivion, anything like that, that's pretty cheap. Again, I'm not going to buy. I'm not interested in that. You have any thoughts on UNH?
Yeah, I mean, the turnaround, it's a trade for me. Like the turnaround play is the main rationale as to why. But really, it's one of those names where like I can take advantage in my wheeling portfolio, and I'm getting paid on the way down, and I'm going to be selling covered calls, on the way up. And I just think that like there's like a lot of seller exhaustion at this point. It's kind of like bottomed. And on the back of this earnings as well, like 5%. Like I don't see it falling so much more. Like, yeah, sure, it can fall to, I don't know, 250, 230 maybe. But like I don't think we're going to break into the hundreds. So say what you will about the business and the ethics and whatever, but like they do print money. They have a great dividend. I think it's going to turn around, and there's a lot of stuff like insiders are buying left and right. I have yet to listen to the call. Like I said, I've been bogged down in SoFi stuff. So I really want to listen to the extra 45 minutes that they added to that earnings call, because I'm sure there's a lot of clarity there. But just from looking at the numbers, I mean, yeah, like they're not perfect. There's still risks associated with it, but that's why it's a trade and it's not like a long-term position. It's not a company that I want to be in for the long while. I think it's a company that I can opportunistically make some money on, depending on how quickly they reverse. But if they don't want to reverse quickly, then I can keep running the wheel on it and get paid dividends in the meanwhile. So I'm fine with that.
Yeah, fair enough. I don't like it. I'm glad that there's other stocks, but the other that was it's in the same sector, and this sector has been pummeled. But I was actually really excited to see this one go down, not because I want to buy it. You know which one I'm talking about?
Is it Novo?
Novo Nordisk.
Yeah.
Down 21%, 22% today. Year to date, down 38%. 1 year down 57%. 5 years, it's up. Good job, guys. The reason why it's down is we'll pause that. They ended up cutting Outlook. I don't believe that they reported today, unless I'm mistaken, but sometimes when a company is entering guidance, and I could be wrong, I just focus on Painpal, SoFi, and a little bit UNH just out of curiosity. But sometimes when guidance is going to be so far off, they instead are proactive and they say, hey, we got some issues. And that's really what their GLP-1 offering. There's a lot of reasons for this, but in essence, they revise massively their expectations from the future sales growth down to 8 to 14% instead of 13 to 21%. Yeah. And of course, profit is down as well. So it couldn't happen to a more disliked company. And I bet you know the reason why I dislike Novo Nordisk. Oh, that's fun.
Oh, the lawsuit? Is it the lawsuit?
It's not even the lawsuit. I actually think that this increases the chance of the lawsuit because they're now a wounded animal that's backed into a corner. They've been doing stupid stuff for the longest time. Frankly, Eli Lilly is a lot better company. Eli Lilly, by the way, is down like 5.58%. Yeah. If I was interested in this space, I'd just be like, okay, this is dumb. I'm going to buy Lilly. I'm not going to do that.
Sympathy pullback from Lilly.
Yeah, and it's dumb. Like Eli Lilly is a very well managed company. It's very strong.
I mean, it's not that dumb, because like Novo issued weak guidance for GLP-1s. Like the natural extrapolation you would make in your mind is like, oh wait, the GLP-1 space is not like the demand is not going to be as strong as like, and so like Hims also was down earlier in the morning, but Hims is just like super volatile, so it ended up today positive. But I get where they're coming from.
Yeah. Lourdes said that he bought Lilly today. It's like, honestly, like when you get sympathy pullbacks that you know that the company, it's unrelated. Like honestly, the GLP-1 product of Eli Lilly is differentiated. It's better than semaglutide, especially what they're coming out with, the oral. This isn't liraglutide or anything like that. It's just like, that's one of the reasons why Novo is having issues. They've tried to put part of the blame on Hims and other compounders. And it's fair enough. Like you can say, well, they're being too aggressive with this, but the way that they broke that partnership agreement with Hims, the interview with Andrew Jedam, when he talked about just some of the details, he didn't go into like all the details. It sounded very sketchy and very wrong. And then like the press statements and press releases that they've done multiple times insinuating this is knockoff, it's not FDA approved, which is technically correct, but also not correct and wrong because they don't sign off and seal and say that this is the same with compounded product, although they allow it even under the shortage list, 503 exceptions. The nastiness of that letter that they made as well. It just like, and the allegations, honestly, like it wouldn't have shocked me if Hims actually sued them or if they do a lawsuit, a countersuit, I think is actually pretty likely, more likely than not. Just because of smearing Hims' name and making it sound like they're selling a sketchy bootleg product. And we're here on the Bootleg Weekly, we're all about that. But I mean, like, that was actually the least professional statement I've ever seen. And I've seen some doozies.
Yeah. I mean, I never intended on buying Lily or Novo in the first place. Uh, and I think that like they obviously will throw their weight around and play dirty and try to play all these legal battles. And yeah, it does increase the risk of a lawsuit. But yeah, I just
But I'm glad. I love to see them tank. I despise them as a company. UNH too, honestly. Although Novo, it's personal. So
yeah. Yeah. Sagic says they seem controversial. Honestly, they're untrustworthy. At least I wouldn't touch that stock. I don't know what to believe there.
Yeah.
I get that.
They have a management leadership issue. That's part of the reason why they're getting rid of their CEO. But like we talked about this like a month ago when Hims is like, hey, guess what? You're going to have semaglutide, which is the GLP-1 solution of Novo Nordisk, and it's going to be the genuine stuff, the branded stuff that we're going to offer in Canada starting in January. I think January 6th or something like that. Because Novo Nordisk was so poorly managed that they didn't file for the patent protection of that, which would have cost $250 or Canadian, doesn't matter. And then when they were reminded, like, hey, guys, you're late. There's a penalty, but you can still protect your patent rights. Like, it's good. Yeah. Something is critically wrong with Novo, and actually a lot of something. So, yeah. Monjaro. Yeah, that's right.
Yeah. Lilly is taking market share.
Yeah.
And interestingly, like, I'm fine with you having a cash grab here where you're just selling cash secured puts. But keep in mind, like, rule number one of cash secured puts is never to sell it on something you don't want to own. So if you're fine owning Novo and getting a sign, then go right ahead, man.
And think about for a minute too, since you've not done this. This is not financial advice, but just saying, at least think about this of doing the same on Eli Lilly if you can, like if that's the sizing that you're looking at, because again, it's a much better managed company. They have a much better product, and they were brought down by 5.59%. Now there might be other news there. I don't follow that one closely, but if this was just a sympathy takedown, that could be an opportunity too. Better than even like, oh, wow, but this one's 21% off. You know, sometimes they're discounted for a reason. Usually the market does overreact, but I don't know. Be careful. Never chase the premiums. Don't be like
that. I do that all the time.
You do fine. Well, for you, it's always tickers that you want to own, though. So yeah.
I wrote $55 puts on Hims that I still have open, by the way. I mean, they're like 60%, in profit, but like I wrote them when Hims was at $48 because I was like, okay, well, in September, end of September, my break even would be like, I think it was like $47, $46 or something like this. And I was like, would I be fine to own Hims at that price? Absolutely. Like I would buy Hims on the open market at that price today. So I just wrote the puts, and so like even for UNH, like I know that I want to be in that position. So I'm writing them 280, 275. I'm probably going to write 270s or 265s tomorrow, all for the same expiration date. So I can have a nice blended average down and then sell covered calls on it, but that's a position that like I feel comfortable being in for the next little while as a trade. And that's it. Like I would rather write on UNH right now than write on Tesla, quite frankly. Even though Tesla would probably give me better premiums, and I know the company way more, I just have less faith in the deteriorating fundamentals.
Yeah, so about that, it's been since last week when we looked at Tesla. What do you think of the earnings?
Yeah, I thought the earnings were brutal. I did not think they were good at all. I think, a lot of it was expected. A lot of those numbers were not really surprising for Tesla, but I just think, so there's two things for Tesla. Okay. Then here's the thing you guys have to keep in mind. There's three things I want to mention. So the two things for Tesla are narrative and financials. Okay. Those are the two sort of pillars. Whenever in the past they haven't had financials, they've had narrative. But I feel like we're going into a period over the next 6 months or over the next 12 months or over the next 18 months where we're going to have neither of those two things. The narrative is going to pick back up in late 26 and in early 27 when robotaxis expand nationwide, when Optimus starts to get ready for, mass production and actually starts sales. And the financials are going to pick up similar to that time frame, probably a couple of quarters ahead. But right now, I feel like we're in a lull where we have neither of those things. And the only thing for Tesla is like it's coiling a little bit from a technical perspective. And like, yeah, sure, it could shoot up to 450, but I don't really want to just invest on that chance alone. Because, I mean, look, to Tanner's credit, when he sold Tesla, he rotated into NVIDIA. And over that same time frame, NVIDIA has treated him so much better than Tesla did. Because there's just other opportunities to make the same return with way less risk. And for me, like, I didn't cut my Tesla position. Like, dude, the Tesla cult is insane. I was like, I cut my position by 60%, and you should have seen some of these comments. It's like I said, I shot Elon's dog or something, like, and I'm like, dude, 8% of everything I own is still in Tesla. It's just not like 20%, it's not like 18%. And so I feel like with the risk that I'm taking on, I want to adjust that downwards so I can sleep easier at night. And I feel like I can make that same ROI in an easier way. That's it.
Can you bring up the damn dog okay comment at 7:35?
Then
we'll go back to Tesla.
I'll also bring up Jeff's comment in just a second, but 7:35.
Yeah, UNH is a great company. Great companies don't have the highest denial rate out there. Great companies usually don't have their CEO assassinated, which it's illegal. It shouldn't have happened. I'm not saying that's okay, by people that are so upset because they essentially killed their grandparents, or was it parents? I can't remember the story on that one. That doesn't mean you can't invest in it. That doesn't mean you can't make money. I'm not saying that people that invest in it and make money on it are wrong or bad or scum. I'm not saying everything that they do is bad, but it is a company that I think is at best amoral, maybe immoral. So,
yeah, but I think those are two like different ways to measure. You guys are saying the same thing in two different ways. He's saying great company financially because they just make a lot of money. You're saying they make a lot of money because they screw people over. Both are true.
Yes. Yeah, honestly. So yeah, one other thing with Tesla. So it's a stock that trades on the narrative very much, not fundamentals. Quarter three is of course going to be amazing just because that forward demand lever has been thrown simply because of that tax credit expiring. So there's going to be a lot of sales there, which will be interesting to see. The other thing that really caught my eye and caught my attention was the agreement with Samsung. So specifically, Samsung is creating and making these chips for Tesla and for their use. And this is the AI6 product, which of course will go in the cars, the robotaxis, and also Optimus as well. What probably the most interesting thing on there, so this is in Texas as well, so yay Texas, is Elon's comment basically that, I don't remember the exact words, but they can walk through the factory anytime, help them optimize, their manufacturing process, make sure things are going there smoothly as well. I don't know. I thought that was pretty cool. It's something to certainly keep an eye on. And that's really the question is when we'll see acceleration for robotaxis, which Elon also did allude to. They talked about that as well, that next year, like it can accelerate and ramp up very, very quickly. But there are some regulatory headwinds. We'll have to see how that plays out. And there's honestly, Elon timelines, I would just be careful with them. So I would love, honestly, Tesla stock to go much lower, and then I can add a whole lot. I'm also glad that I still have a small position. I don't want to lose sight of it. It's an amazing company facing amazing, ridiculous headwinds, some of their own making. So like you look at the numbers and they're actually worse than I expected. So I'm a little surprised that the stock did what it did and is doing what it's doing, but we'll see.
Yeah. And like, I think that, I wanted to keep a position in Tesla because I would have FOMO if it just shot up to 500. I'm like, oh man, I'm completely out. But at the same time, like with anything, if SoFi goes to $30, I'm going to cut some of my SoFi. I'm sorry to break the news so publicly, guys, but I don't know, unless it's Roy with Palantir at 160 and you never, even Roy cut Palantir, right? So the point is the risk you take on is correlated to the valuation of the company that you're at and the growth rate that you can expect from that valuation. If Tesla drops to $200, I'm going to buy more Tesla. I'm going to increase my position because the reward is going to outsize the risk. If Tesla goes to 500, I'm going to reduce my position because the risk is outsized the rewards. So that's all I'm doing. It's I'm right sizing my Tesla position. I'm not like selling out completely, but it's a pretty big right size.
Yep.
Okay, so let me bookmark some of these questions, and we will get to the question and answer period. I want to throw up Jeff's comment because he was gracious enough to donate some money to us in a time when we SoFi investors need it the most. He said, SoFi floor target now, question mark. The phrasing just gave me an aneurysm, but I think $18 would be a good floor, like a point where it can continue accumulating. I think $18, $18, $19, around that range is where I would see it. Yourself?
I've got a lot of SoFi. I would have to see where it settles because I don't allow myself to buy unless it's in a swing portfolio, which actually I would probably do with SoFi just because I see tremendous upside over the next 1.5 to 2 years. I would like to see what this money is being raised for first, but if it's decent, at least decent, if not really good, and it's probably going to be really good. Like the dream scenario is if it gets like under $15, I'd load up pretty heavy there. But we'll have to see. Probably, if it got to 18, 17, I don't even think I would add it all there, even to a swing portfolio, until there was some certainty and clarity. But again, I have a large position of SoFi. Right now, today, although we'll have to see with after hours, it's my second largest position, so it's not small.
Okay. Do we have another topic, or shall we just jump straight into the questions?
A couple of smaller topics, but let's just jump straight into the questions instead.
Cool. Okay, so you guys can throw in questions, and we will try to get to as many of them as we can.
Yeah, so that UNH, I'm not saying buy it, not buy it. Like I don't care about that company. But that's one of the beautiful things about having some cash entering an earnings season is there's always going to be companies like Novo Nordisk. I wouldn't buy Novo Nordisk. It's not one that I want to own. But there's always companies that will take a massive dump, and you'll look at the earnings, you'll look at the news headline or whatever, and you'll be like, okay, that's actually dumb, and that's a great opportunity. So I'm not saying have a whole bunch of cash entering earnings season, but it's not the worst timing for it. I think that we'll actually probably have some more opportunities over the next 3 or 4 weeks. None of the companies that have tanked, and I'm including PayPal, I'm interested in buying or adding more. PayPal I already have too much. So,
what's your average on PayPal? I love this.
I'm probably underwater, honestly. It's probably like 72. So, yeah, I'm down. I'm sure.
Dude, the stupidest things make me laugh. Look at the spelling. What's your average on PayPal?
Papal? Oh yeah, I should have bought Papal. If that's a real company, it's probably outperforming PayPal.
It's the Papal Church.
Papal stock. Nope, brings up PayPal instead. All right.
Okay.
Yeah, Pope Leo the second, or no, it's not the second. That's from the Crusades. Whatever this Leo is. Yeah, long calls on him.
Yeah, exactly. Do you have some tokenized call options on his career?
Well, I've tokenized the Pope himself, and I'm also selling NFTs off of that. But it's based on an algorithmic stable coin, but I'm using model context protocol to it. I'm just kidding, guys.
Yeah, just say all the buzzwords.
Yeah,
sounds smart. Okay, I am going to let Roy answer this one while I go to the bathroom. Roy, what is your thought?
No, you kind of cut off. Yeah, so that's one of the great things about Robinhood, especially this earnings season, that there's so much uncertain and unknown. SoFi is usually pretty easy to predict, although it will be more challenging next quarter because they didn't do Q3 specific guidance. With Robinhood, we know all the numbers. We know all the metrics except for just a few. So we know the monthly numbers for 2 out of the 3 months. And we know the preliminary, which means all but like 3 or 4 trading days for the last month. Now, we don't know margin book numbers. We don't know some of the numbers from Some of the newer initiatives, Trade PMR, Bitstamp as well. So we'll have to see how those do, but it's going to be between very good or amazing numbers. There's actually a wider range as far as analyst estimates than expected, but yeah, they're going to put up really, really good, solid numbers. I think what's going to be more exciting is when they release their numbers for this month, for July. That'll be probably fairly soon after the month is over. So next week, I would expect. I don't think they've announced that quite yet. So that's really what to keep an eye on. And they tend to, what I love about Robinhood is they will answer like 50 questions from analysts, retail analysts, which I guess is me. And so you get a lot of detail on unknown stuff from that Q&A period. And there's nothing off the table. That's a really nice thing. They probably won't raise money after hours, even though the stock is trading up quite high and quite nicely. It wouldn't make sense. They have tons of cash. They make tons of cash. Funnily enough, I had somebody tell me like, so every single company that flies high, that doesn't offer a dividend, the top question or one of the top questions is always when dividend. You have that with Palantir. You have that with Robinhood. Actually, I didn't see it with Tesla, which is actually refreshing and nice. I'm sure it's somewhere there.
Definitely there somewhere.
They tell me when I was making fun of that question, like Robinhood couldn't even offer a dividend if they wanted to. It's like, okay, they have like over $4 billion in cash. They're massively profitable and accelerating. So I don't know what you're looking at, but yeah. So earnings, like that's a nice thing is going into Robinhood earnings. You already know it's going to be amazing or at least very, very good, if not amazing. So what's not to like? Plus, it's pretty entertaining too, the way they have it all set up. They've actually changed one thing for the earnings call setup. You'll see that. But yeah.
Apparently Tanner's losing his mind over there.
Yeah, I did notice when Tanner started his live stream, like our viewership dipped.
Oh yeah. Dude, Tanner was like, so I love the guy. I absolutely love the guy, but he was so incredibly like amped up about, oh my God, like so, and I'm like, dude, like you've been here before, you know how this story is going to play out. 17%, ladies and gentlemen. And I'm like I understand part of that as being a content creator, and then the other part of it is like he's like really excited because it's been held down for so long. But I'm like, oh man, like please, it's like a part of me I was like, I hope it goes down because of my covered calls, and then another part I was like, I hope it doesn't go down because poor Tanner. And I can just imagine his frustration right now.
Yeah, and we love the guy. We're friends with him. It's going to be very fun. The FinTech Friday this week. Not just processing. It's actually more entertaining when we're not all agreeing and there's pushback. And I think that there will be. I've not listened to Tanner and I've not heard his take, but I know data-driven investing was not happy with this offering. I mean, I'm not happy. I can be happy. I reserve the right to be happy. Tevis, you're probably more neutral or just resigned.
I'm more neutral. Let's put it like that.
I mean, covered calls. Admit it.
My price target for the end of the week was 1950, and you guys all looked at me like I said aliens are going to land on Friday. And if we close at 1950, guess what I'm doing? I'm going back, I'm clipping it, and I'm going to be like,
I should have said 11.
Yeah, 11. All right. Let's continue with the questions and the answers period. What's Steve saying on SoFi dilution decision and rollout? Yeah, I don't know, Sagig. Maybe we'll have Steve on Friday, and then you can hear from him yourself. So make sure to tune into that. Let's take a look here. Do we know what price the offering is for? No, but we'll probably learn what that is when the actual offering is closed, like when the deal is done. What do you think is the floor? Oh, poor Jeff asked and then he donated. So 18, Jeff. 18 is the floor. What are your guys' thoughts on? Okay, you answered this. What do you consider a good ROI and what is your usual time frame to achieve this? Yeah, baseline is, can you beat the market or not?
S&P 500 is what I have.
Exactly.
Yeah,
exactly.
So it's up, what, 9% this year? So as long as I'm beating that, which I am, actually, there's only 1 year that I've failed to beat it. But also, you need to not read too much in a single year, especially if you've had success in the past. You know what strategy works well for you. Keep doing that. Keep improving it. But yeah, it's best to compare yourself to the index. If you're able to beat that on a consistent basis, that's really good, and keep getting better at it. And then compare yourself to yourself. So there's been times when, and I think we've talked about this before, where you have the wrong process and you just get lucky. Just that's happened to me before, dumb luck. And there's been times when I have the absolute right process, I do all the right things, and I felt like that with the Webull thing. And they had the stupid offering, and I'm like, you know what? I don't like the way that they're doing this, how they're going about it. So, although if we had stayed in that stock, we would have made some money, Thomas. So,
yeah, I mean,
but it'll happen.
I would even go so far as to say, like, you have the right process, but you're unlucky. In other words, like, the stock runs for whatever reason in the short term, and you look like an idiot. Like, even with me for Tesla, like, I sold Tesla, I think like 305, 306, and like literally the next day it was back to 330 or 325. And people were like, "Oh, like, you moron, like, these stupid," and like, okay, whatever. It's one day's worth of thing. Like, I'm selling for fundamental reasons, or I'm buying for fundamental reasons. What the stock does in the following week, I'm not a prophet. I'd be rich if I was.
Yeah, Spicy B has a great comment there. 750. So hard to not compare to people posting their gains. You have to learn how to not do that. You have to. The reason why is, if you're having a great year. Last year, I mean, actually, the last 2 years, I've had ridiculous years. I'm pretty sure my gains destroyed everybody on the FinTech Friday thing. But that's a danger, because I can start thinking like, okay, I'm a genius and I can do no wrong. And what that does is it makes me want to take on leverage. It makes me want to take on risk that is not appropriate for me and what I need to do. It makes me not learn from my mistakes and errors. And then I'm going to have some brutal beatdown losses. And frankly, I would need to at that point. So that would be bad. Now, the other is, if you're on the other side of this year, I have good returns. Like it's I don't know what it is today. I don't even want to look, but it was around 50% year-to-date gains, which is amazing. Like, I'll take that any year. But there's a ton of people out there that have like 75, 80, 130% gains, like a lot. And so I feel like I'm doing well, just because I'm comparing myself to that 10% in the S&P 500. It's like 5x on that. Oh yeah. But if I am like, oh no, I need to double my portfolio this year, which I guess I may be on track for. We'll see. Or I need to do what they're doing and get that 300% or whatever. That's going to make me, again, do the same thing. Take on risk, take on margin, get in positions where I'm gambling, actually, instead of investing. And there are times when that will pay off. But if you consistently do that, it's like going to the roulette table. And let's say you're like, okay, I'll put it on 38. It's 38. You make crazy money. Like, all right, great. And you put it on black, and you get black, and you keep doubling your money. And every single time, you're always pushing your chips all the way in there, and you're just like, I can't lose. One of those times you will, and you will be that sad case of the Dogecoin millionaire who went from rags to riches back to freaking rags because you did not take a gain. You did not risk accordingly, and you were comparing yourself. Now, the last thing is, beyond it being a danger, there's a saying, comparison is the thief of joy, that you should, like, if you're up 25% this year, that's pretty conservative. That's way better than the S&P 500. That's actually way better than the average investor. By the way, a lot of people do fake screenshots and lie, or they'll be like, well, I have 4 portfolios. By the way, my best portfolio is up over 100%. I could just show that off and be like, look at my awesome gains. Let's ignore the one that's up like 3%. So what you're seeing from other people isn't real. Don't let them steal your joy. Compare yourself to yourself, and compare yourself to the index, and just learn how to either ignore other people's gains or bragging and boasting, or celebrate with them, which is even better, although that can be hard to do, especially if it's somebody that's annoying, or you feel like, oh, they just got lucky, but learn how to celebrate them, but also yourself. Take some joy.
That is very well said. Roulette has 38 slots because you have double zeros. Learn your gambling, son.
I don't gamble, except for options. So
yeah, I think my portfolios are both, all of them are doing very well, but that's because they hold mostly the same things. The Wheeling portfolio, I think I'm up 41%, something like that. But it's much easier to like rotate your capital in that portfolio. But yeah, the very baseline benchmark is, can you beat the index or not? And if you can't beat the index, then that begs the question, why aren't you in the index?
Yeah, and there's nothing wrong. Like honestly, I don't when I share usually quarterly, I'll do an update on my portfolio. I've got a chunk. It used to be most of my investments. Now I've dramatically outperformed that, but I still have a good sized chunk that will. If I am an idiot and I put it all in zero DT options on PayPal and it tanks, I can still afford to retire at some point. So investing in the index or part of the index is not wrong, even as stupid as the S&P 500 is for not including Robinhood. It's a bet on the American economy. So,
Yeah, I mean, wheeling sounds sexy and all, but keep in mind that I had 7,500 shares of SoFi that I let go at 16, and I don't want to do the math on what the gains would be on those shares if I held them up to 24, where it was today. So you win some, you lose some. Like I still made money on that because I made money on the way down, on the way up, and on the capital gains. But again, it's a different strategy, and you have to treat it differently.
yeah.
Yeah, and this as well. So,
Yeah.
Next question.
It
Yeah.
makes sense, by the way, Willing, if you have a tax advantaged account that's of the
Yes.
size that you want, wheel in there. I'm not saying don't elsewhere, but I mean, you don't have to worry about taxes then. So,
Yep. All right, let me bookmark some more questions that you guys are asking. And
Mark Maizano at 7:55. I'll answer that as you. Well, it's old for both of us, but I'll start the answer while you're tagging others.
Sure.
Question for you both: do you guys sell covered calls when exiting or trimming, or just sell or limit sell? Yes, but not all the time. So it depends on a lot of factors, honestly. So, for instance, let's say hypothetically, if PayPal did the opposite, my PayPal position was, now it's a lot smaller, like 18% of my portfolio. I usually aim for it to be about 10%. Some of those are in swings, swing positions as far as options, and boy, those got cooked today. But I would take some gains on that, but I would also sell some poor man's covered calls. Poor man's covered calls are a little bit different than covered calls, and usually I'll just exit them on expiration day rather than having the market settle it, because it can be a little bit weird and finicky at times. But if I'm feeling like I need to take some gains, especially if it's something that I am overexposed to, that I'm like, okay, this is intended to take gains along the way, so I don't have to touch most or all of my shares, I'll sell covered calls at the strike. And if they're just regular covered calls that I'm selling, let's say I didn't do this for SoFi, but if I'm like, you know what, SoFi, it's appropriate for me to take some gains and right size that position at 26. Maybe I'll sell 500 shares or 5 strikes at 26. And if it hits 26, awesome. I made some money. If it blows through it, it's still fine. I wanted to downsize that position and take some gains. And honestly, if it did this and it fell back to 21, at least I have that premium. So I actually really like it. That's one of the things that helps me with covered calls is I struggle with being able to take gains. I've gotten better at it, but that almost forced me to take gains. But it always needs to be at a strike where I'm not like focused on the premium so much as I am like, if it gets to that price, I'm happy selling. Now there's all the other side of it too, is if you're doing covered calls like months out, the challenge is it might blow through that price and also come all the way back and you regret not selling. So when I am using covered calls as an exit vehicle, it's usually when I'm pretty close to that price. So for instance, if SoFi was really trading at 26 and I sell something for the end of next week at 27, I mean, that's pretty tight. Good amount of premium, good chance that I exit. And if I don't, that's fine. But I wouldn't go like 3 months out and say, oh man, look at all this premium, because there's a lot of unknowns and a lot of things that can happen over 3 months. That's just the way I do it. You, Tevis?
I think if I want to get out immediately, I will just sell it, which is kind of rare. If I'm okay letting it go, then I'll do covered calls to let it go. If I want to get out of it, but I'm not like in a rush to do it immediately, for example, I will do covered calls at the money so I can maximize the premium on that. Because I want to sell, like I would sell it today. Like let's say if I wanted to sell SoFi today, I would just do at the money covered calls. And but in the case of Tesla, for example, I was like, I just want to get rid of it right now, which is probably dumb. I should have done the covered calls, but I just wanted to get rid of it. And then if I don't want to let it go, I'll still do covered calls, but I just will do like way far out of the money, like 10 delta or 15 delta or something.
Yeah.
Okay. Got a lot of stuff to get through. First of all, Chip Diamond, thank you for the $2. How does this deal affect Justin Herbert? I don't know.
He's the quarterback of the Chargers.
Yeah, no, he's the SoFi sponsored athlete. I don't know that this deal affects him at all.
Maybe they're buying him. They're acquiring him to run their crypto division as well.
They already own him. Tevis sounds like a therapist. But today I am Roy's therapist. Today of all days.
Honestly, like that's the important thing, is to have some friends, even if it's not in real life, that you can remotely bounce off, text, whatever. That you can pitch ideas to, that they can poke holes in your thesis, and also just be there to be a listening ear. You guys are all my therapy session today. So Painpal and so.
Roy has promised me lunch with Matt if I
fly to Houston,
go to Texas, but I'm yet to get an invitation. So, am I Dutch? I am not Dutch. Thank you for asking. Try again. Official spokesperson for him is Pope Leo. Welcome. We were just talking about you, sir, earlier. Sir, Your Holiness.
Long calls on Pope Leo.
Long calls. Tev is selling most of SoFi at 30. No, I am selling some of SoFi at 30 for sure. Not against that at all. Why is sentiment so bad on PayPal? It offers so much. Mark, why do you do this to me? We're not answering this. Or maybe Roy, 60 seconds.
I don't know. I would have, going in, I would have thought EPS miss. Like if you told me this was going to be the result of the price action and guess the results of PayPal, I'd be like, okay, maybe they had an EPS miss because they shifted some of the market spend specifically for this quarter. Mm-hmm. Maybe top line revenue came in so soft and so weak, or they just said, it's uncertain, we're not raising guidance. None of those things happened. I don't know.
Fair. Tevis, how much SoFi do you own? Can you tell us? I own about 22.5% of my portfolio in SoFi.
You almost have to do the SEC filing. I think when you get above 10%, it's time.
Not 22.5% of SoFi, in SoFi. And I will pair that with this question. Tevis and Roy, what are your top 5 equity holdings?
Yeah. I've actually got a cool graphic that is no longer accurate, but that's kind of the way it is. I'll throw that up while you go through yours.
Okay, so equity holdings assumes no crypto, assumes no cash, which would heavily skew mine because my top position right now is cash. Yeah. Okay, number 1 is SoFi, number 2 is Hims, number 3 is Tesla, number 4 is Amazon, number 5 is Lemonade.
Here's mine.
That's just equities. This is Mr. Roy's.
Number 1 is Robinhood. Number 2 is SoFi. Number 3 is PayPal. Number 4 is Palantir. Number 5, although it's close between these, is Nubank. Maybe not Nubank now. Hims is pretty close there. So could be NVIDIA too. It's been on quite a run.
Yeah. And I guess if you had to include other stuff for me, it would be number 1 is cash. Number 2 is SoFi. Number 3 is Bitcoin. Number 4 is Hims. Number 5 is Tesla.
Yeah. A lot of fart coin for me. So
what's the crew's thoughts on coin going into earnings Thursday?
Oh man, this is one where there's this in Cloudflare where I'm like, if there's an irrational sell-off of a company, let it be one of these two, because I got money ready for this. Coinbase is massively increasing their TAM with things that they're launching. I don't know how the earnings will be. Honestly, they've gone up quite a bit, and usually that scares me in earnings. But I don't know, like on the granular level for Coinbase, like what they're looking at for this quarter. But please tank, come down. Big like a Novo Nordisk move. Do it, and I will buy gladly because it's a great company. I would love to. Probably, I'm going to ask him maybe after the next quarter or. Maybe closer to November or December. We'll have to see. But yeah, hoping to. I think he's open to
that. Thank you, Ricardo. To the F That Guy Roy Club. I don't know who this was in reference to.
I'm not sure.
Probably somebody that you were like ranting about.
Maybe.
Um,
So, any thoughts on coin?
I have no thoughts on coin, really.
Fair enough.
Nothing substantial. I thought you sold Tesla. Seamus, I cut my Tesla position by 60%. Like this is like Tesla's still, as of today, 7.5% of my total portfolio. That's just, it speaks to how like unreasonably large of a percentage it was prior to this. Because it was like 18, 19%. Like it just didn't make sense, dude. So yeah, I cut it. I haven't sold it out completely. Then again, I might trim more if it goes up, and I might add if it goes down. Let's see. Do you think possible PayPal? Do you think it's possible PayPal not considering a dividend because they feel it may be perceived as an admittance of failure and no future growth? I mean, they're growing like single-digit percentages. So
no, they're considering a dividend. They mentioned almost as explicitly as you can get on their investor day. But they're focused on execution right now and buying back while the stock is low. That's something that would be a 2028 or maybe late they announce it in 2027. So it's a little ways out. I won't hate it then. I think that the stock will be quite a bit more. I know people are sick of PayPal and I'm sick of the stock. I love the company. I still think that they hit an all-time high by 2030. So, and real quick to answer Josh's question at 801, Roy, who will have a higher percent increase in stock price for the rest of the year, SoFi or PayPal? Probably SoFi. A lot of tailwinds. They're cooking up a lot of things, especially with this big fall after hours. I wouldn't be shocked to see them above 30 at some point this year, and not just a blip above 30. As long as the macro is still intact and they continue to execute, like they're doing a lot of things right. And again, a lot of those headwinds have shifted to tailwinds. PayPal, I think it might take as long as Q4, which would be reporting in January of next year, to really excite the market. It could happen earlier. I was thinking it might possibly this quarter, but I was looking more Q3 is more likely. We'll have to see. But I would say SoFi more so than PayPal over the rest of this year.
Yeah. Do you guys own Bitcoin? I think we both own Bitcoin. It's my third.
My only DCA is Bitcoin right now.
Exactly. Do you think Tempest is a good stock to buy or AI bubble stock?
I don't really know enough about it. I was so focused on Palantir when Tempest AI became kind of a thing, and Nancy Pelosi was all over that. I don't know.
Do you have any thoughts on Trade Desk with Google's recent trajectory?
I mean, it's a really good company. Jeff Green is an amazing CEO. Like Google, the model that the web is built on, and it's around advertising, is shifting. And so I have concerns with Google more so, although long-term, again, not to rehash old arguments, Google is going to be perfectly fine. There's just going to be a shift between where they're at and where they're in the future. Everything except for search is going really well. And frankly, the last quarter was amazing, like as far as a report. The Trade Desk is going to be fine. And it's not all advertising on the web, but I think that there's probably going to be some short-term headwinds rather over the next few years. And even though that they're not at the peak, they've still fallen a bit. They're still not a cheap stock. So I personally would prefer to not invest in the Trade Desk. If I was interested in advertising, I'd be investing in PayPal, and I am.
That's a good answer.
The transaction graph, look it up. Look what Dr. Mark Grather is saying. Look him up too. Not saying buy PayPal. It's a painful stock, but yeah.
PayPal will have its day.
Maybe.
Are we worried about HIMS running up into earnings, or could earnings further fuel momentum? Ozzy, we will answer that question because it seems Roy wants to answer it. But in about 20 minutes, I'm actually going to do a full live stream about Hims and Hers company, going through the news, going through the NOVO decline, and going through the earnings predictions that we have going into next week when they report on Monday. So make sure you stay tuned for that. It's literally 20 minutes from now on this channel. So I can answer this in much more depth there. And so I'll just let Roy answer right now.
Yeah, I wouldn't be worried about that. HIMS is very volatile. It's going to run for no reason or lots of reasons. It was pretty cool to see that go green while the market went red. I love when there's some alpha there. The earnings report is going to be what it's going to report on. I think it's actually the most interesting out of any company's earnings that I'm following. Period. Not entertaining, not best, just vital. Versus last quarter for him, so I was like, these earnings don't really matter too much. They're going to be really good or maybe amazing. This one's very important. So I feel like it's a bit of a trap quarter where if they report too good of numbers, there's going to be a lot of questions about that 503A. And as a result, I think it increases the chances of a lawsuit. Although if that doesn't land within a few weeks of the earnings call, I think that it's just not going to happen. Or that they were a little bit overambitious and they had to pull back on things. It's going to be their first quarter of sequential decline. At least that's what they've guided for. So, but yeah, I'm going to be paying attention to it, even though I am more into Palantir, more excited by Palantir. Palantir is going to have an amazing quarter. Love Palantir as a company, stock. It's great. I will skip that earnings call and watch it later and focus on HIMS with my boys.
Yes, Roy is covering HIMS earnings live with myself, with Nate and Elijah as well, and maybe Nighthawk. If you've seen Nighthawk on X.
Is that next Wednesday, or am I wrong? After hours?
Next Monday, August 4th.
Yes, good.
Which I will be probably skipping a portion of my job to do with you guys. So thank you, Chip Diamond, for the $2. You're keeping me employed, sir. How will this deal affect analyst price targets? I mean, I really want to give you a legitimate answer because you actually donate money, but I don't know. So here's the thing. If an analyst price target is going to be bearish, like they're looking for reasons to be bearish. Like, for example, Bank of America, for example, they raised the price target, but they maintained the underperform rating. And so naturally, SoFi, like analyst price targets going out 12 months is like $17, I think is consensus. So SoFi currently is trading above. So that means one of two things. Either analysts have to come up or SoFi price has to come down. I think a lot of analysts will come up on the back of this earnings. Devin Ryan and others already have high price targets. But I think if an analyst is bearish and has been bearish for years, they're just looking for reasons to be bearish. And those reasons don't have to necessarily be rational, because we've seen the Cavarinis and the Bolognas of the world have the most irrational reasons as to why this thing should sell off.
Yeah.
So it's more.
Real quick, I see Josh saying he's truly considering PayPal Leaps. A couple others as well. There's a comment there waiting for Jan 2028. December's is out. December 2027. I'm not saying do or don't, but that's what I bought today was December 2027 $100 strike leaps.
That could be interesting. That could be really interesting, actually. Why so far out of the money?
$100? That's not that far out of the money. For 2.5 years.
Right,
it's set 71. So yeah, $100 is not really that far over 2.5 years. I think it's pretty conservative.
Oh, December 2027. Okay.
Yeah.
Okay, fair.
Yeah, if this was like 2025, I'd be like, okay, that's reckless. 2026 is like, that's probably okay. 2027, like, yeah. I mean, who knows? Like, it could be absolutely abysmal. The world could end, whatever. But like, I don't know. You can always write them in the money too. That's a different kind of play. You still get a little bit of leverage that way, but deep in the money. Yeah. 90 delta or so.
That's an interesting play. I got the DJ.
I
have PayPal $70 December 2027 leaps. Thank you, Pope Leo, for your contribution. We appreciate it. You being a man of the people. I don't know what's next. Let's see. Is there any other questions? I don't think there's any other questions.
So Heinzie Ketchupy, Roy Q, why net over Palo Alto? I don't know Palo Alto nearly as well. I know them. I think that they're a decent company. If I was going to go pure cybersecurity, I would probably go just CrowdStrike, even though it's very expensive. It's in a class of its own. And the opportunity was, of course, that massive irrational dip after the outage. I didn't buy at the time, but that's a different story. So Net is some cybersecurity, but it's also, oh man, I forget the term. It's not ISP. It's DNS. No, that's not it. They basically 25% of the volume of the internet is going through them. So that's a business that's not going to be disrupted. They also have cybersecurity aspects. They also are leveraged as far as AI agents and agentic plays. They also are involved in
Everything with CDN.
What's that?
Everything is CDN.
Yes, thank you. Yeah, it just slipped my mind. So thank you, CDN. And I've looked at the competition there. Like the competition isn't crushing it. Cloudflare actually is. They're going to continue to do very, very well in that field. And Matthew Prince, like the CEO, I philosophically love him and I'm aligned, but also like this guy is brilliant. Plus he is one of the co-founders. He is a founder. I like founder-led companies. Doesn't mean I always need to invest in them, but I think that they're positioned very well. Plus I think there's a lot of room for growth. Now, they're not profitable. I won't just say technically they're not. But I mean, you can see it's a very clear, easy trajectory to figure out. It's a very easy holding for me, but it's always traded expensive, and so I would need a discount. Maybe we don't get it.
Yeah, and their Palo Alto CEO doesn't listen to Britney Spears while he's working on earnings reports. So
yeah, in a coffee shop. What a great comment too.
These are the unconventional metrics that you have to look out for. You remember the last CEO that had some unconventional commentary? His stock blew up. So I'm just
right. And then was bought out. Rubrik, by the way, is a phenomenal company. That one, I didn't have cash lined up and I wasn't ready to buy, but it's one that I had on the radar. I was researching and then it like tripled. And I'm like, well, I still think it's an opportunity possibly, but cybersecurity again is not my field of expertise. So I understand some things. I understand it's a growing demand, but like to look at like a Sentinel-1 and be like, oh, this is a great opportunity. It's like, I can look at the balance sheet, but like the actual technology, I hear the words that they're exchanging with CrowdStrike, but I'm like, it's out of my comfort zone. So yeah, Rubrik, really excellent company. Congratulations, Lourdes, owning 1,000 shares. Boy, you're a well.
It's exciting. Is DLocal on your radar?
No.
That's one we get asked about from time to time.
Yeah, I mean, PayPal's partnered with them. I know what they do. I know who they are. I view what they do, most of it, not their entire business, but a large chunk of it's a commodity. Now they are mostly in Latin America and developing world, so that commodity is not going to feel like a commodity for years yet. So there could be appreciation. They seem like they're well run and they could pivot other directions, but I would be careful of pure payments companies, especially in the crypto environment. They'll be okay. I just think there's better opportunities. Like Painpal. Join the pain train.
Join the pain train indeed. Do you like ASML? I do. I don't own it though. I think this is potentially a good spot to own it.
Yeah, that's one of those that might be an irrational dip. I just don't know. I don't know enough about them. So, but it's a good company.
I mean, they like have cornered a certain part of that process.
Yeah. Melly, Imperator's mentioning Melly a couple of times. Amazing company. And honestly, if that one sells off irrationally at some point, well, I could never sell covered calls on it. Yes. Yeah. I might look at DLocal again. It's been probably 1.5 years since I looked at them last. So
yeah, sorry, cut you off on Melly.
No worries. You need to go though.
I do need to go in 12 minutes.
We'll do questions until the bitter end. So, Tevin, like this is a question that I'll put for you.
Sure.
What are you looking for that you'd love to see an irrational dip in, let's say 20-25%? Throw out a couple of names there that you'd love to initiate a position in, or if it's a very small, like 1% position, that you'd love to expand it greatly.
I would say I would love to see. So first of all, let me answer this. My biggest leap position right now is HIMS, and I cut my leaps in half on HIMS, and it's still about 3.5% of all of my portfolios combined is HIMS leaps, which is like quite wild. Yes, Tevis equals DGen big time. I think HIMS is one of those names where if it's irrationally sold off, irrationally, big asterisk, 25% plus, I would definitely love to buy it. Obviously, SoFi is one of those names. I think Amazon is absolutely one of those names. Like, I want to be owning Amazon more and more. I've been building a position, and if it gets sold off after earnings, like, I would love to, scoop that up. Cloudflare as well. Honestly, Nebius is one that I'm kind of looking into more seriously ever since that stock tank episode. I think Lemonade is something that I bought more of yesterday. And yeah, yesterday was Monday. Yeah, I think that those are my answers.
And I see a question on Figma from A1. Are you guys buying Fig on
Nope.
SoFi?
No, I'm not buying it because I think two things. I think number one, I think the IPO is absolutely going to be overbought, and it's going to be super expensive. And I think secondly, I think with AI being where it is, it sort of abstracts away Figma to a certain degree. Now, I could absolutely eat those words and Figma could keep innovating, but I think that from my interactions with designers, it almost feels as though they can just generate high fidelity mockups straight through prompting AI, and the AI can just generate like prototypes even. And so the use case for Figma is kind of penetrated a little bit through that AI being so good at generating assets, and it's only going to get better. And so I think like if you're a designer and you don't need to go from the traditional like wireframes to low fidelity to high fidelity mockups, and you can just prompt your way, you can like vibe design it. I think that will not only cut time, but it'll allow designers to be able to iterate in a more rapid fashion because it takes them less time between iterations. And I think that's something that is a potential bear case for Figma.
I went in for I've never done an IPO before, and I figured I do want to do it. I don't know, it's a tiny amount that I'm asking for, like tiny, like 25 shares or something, just for fun, because I've never been part of one. I avoid IPOs. I usually wait for a sizable pullback. Sometimes that never comes. 3 to 6 months afterwards is usually that sweet spot to buy. Not always the case, but so I figured, why not? 25 shares, it's not going to kill me. Figma's not going to zero, but if I lose, a little bit of money, it's fine. But it's not. I do need to do some more due diligence in Figma. I think Lourdes is wrong on Duolingo being killed by AI, but maybe right on AI at least displacing Figma, or at least killing is probably the wrong word. You probably don't mean kill, but taking some off of the TAM.
I get it. I get, like, I just articulated maybe poorly a case for AI eating Figma's lunch. I think similarly for Duolingo, like it's very easy to extrapolate out a world where if you can lower the latency or the delay in which the translation actually happens, then there's no real need to actually learn other languages, because you can have a device in real time translating in your ear that's all powered by AI. Right now, the biggest issue is the latency, right? It's the feedback loop is so long that when I went to Japan, I was using Google Translate and I was saying something and it was translating it and doing it in near real time, but there was still like a 10-second, 15-second delay. And I think if that gets cut down to like 2 seconds, then it'll be fun to learn a new language, but the utility aspect of it is going to be gone.
I saw a related question there. Oh, Accelerate return. Heinze asked at 822. Yeah, that's one I'd like to get back into. It is more expensive than when I sold it for, ironically, more PayPal. Didn't work out very well, but I mean, it's a really good company. I would prefer it goes down, but Accelera and also Enphase are still on my radar. They're still very high on my watch list. And I may even see an opportunity to get into either of those. So, I mean, they're good companies that are one. It's been tanked, and Enphase I'll probably wait on longer just because it is a wait and see play for probably quite a while. But Accelera might be a little bit overhyped, but I don't think it's expensive or ridiculous right here. Like if they do what they have potential for, this is very cheap. So, but I wouldn't go all in. Like there's other plays I'm looking at more. Brock Capital asked, although always a buyer of NVIDIA, I love to see a pullback. Just can't ignore the CapEx over the next couple of years at the very least. It's really the only equity I'll add at any price currently. That's the way I feel about NVIDIA too, that if we emerge from this entire earnings season, I have too much cash, which is a nice problem to have. But if that continues to be the case, at that point, I'll start DCAing into NVIDIA as well. Buy like 3 shares or whatever each week, and whatever the price is doesn't really matter. I mean, it does, but you're not in NVIDIA, Tevis. So what price, assuming nothing has changed with NVIDIA at all, nothing else sold off irrationally, it's not an April tariff thing, at what price would you become a buyer in NVIDIA? Or is there not a price?
The only reason I was a buyer in NVIDIA in the first place was because it was irrationally sold off.
So you don't believe in Jensen then? You think AI is fake?
I love NVIDIA, but there's way too many stocks for just one little Tevis to own,
You think Huawei is better, admit it.
Exactly. I'd rather invest in Temu. Guys, my brain is absolutely fried. This is my 4th hour live streaming to you guys today, and I have about 1.5 more hours minimum to go. And I also recorded a SoFi video, which I was in the process of editing when I hopped on live with Roy. So what I will ask you guys to do is I threw up this link saying SoFi Weekly starting in 5 minutes, and here is the link for it. It is pinned on my channel, and that show is starting in 3.5 minutes. The guys are actually waiting backstage. I'm going to end the stream, and I'm going to get a bottle of water, shove my face in a pillow for 30 seconds, and then come back out and start a Hims Weekly stream, all for you guys.
Are you not entertained?
Are you not entertained?
And then after that, he's going to do some TikTok dancing videos. So be sure to stay tuned for that.
Oh my God. I already did a TikTok video today, actually.
Did you dance? You got to dance.
I didn't dance.
It's TikTok, man. I may be old, but that's one thing I know. Dancing on TikTok works.
Yes. Dancing on TikTok works. Roy, thank you so much, my friend, for this very entertaining 2-hour stream. This is becoming a habit of ours. 2-hour stream, eggs and tacos here for the TikTok dance. You should join me in the next stream, eggs and tacos, because that's when the dancing will start. Thank you so much, everybody. The link is pinned in the chat, so catch me there in 2.5 minutes. Thank you so much, Roy. And we will see you next week on the Bootleg Weekly podcast, where me and Roy will be talking about whatever other DGen stuff we've been doing from now until then. Goodbye.